Hey guys, welcome back to my channel. So today's video is going to be different from the normal one we're used to. I'll be talking about 5 exceptional tips for trading stocks. You understand? We know we mostly do analysis, but I feel we should work on our psychological aspect a little bit. So we'll be diving straight in just after the intro.
Okay guys, so welcome back from the intro. So we're going to be diving straight into the number one trading tip for exceptional success. So now, number one is what? Trading with a positive mood. You understand? This sounds very underrated, but this is one of like the trading hacks or the best trading hacks you have to give yourself. Trading is all about emotions. In as much as we know that your mood does not affect the buy or sell of the market, but something you also should know is that nothing actually affects the buy or sell of the market. It's not your strategy that affects the buy or sell. It's not your fundamentals. It's not your technicals. The market does what it wants to do. The market can actually break your technical. It can break your fundamentals. So now, how you react to it is what actually makes you profitable or non-profitable. You get? It's the way you react to what the situations the market is actually facing you with that determines if you're going to make success in this game. And you entering into trading or starting your day with a bad mood is not going to help at all, because when you're not in your best mood, your brain is not actually thinking straight. That is by the way. The major reason is that you begin to see trades that are not actually there. Imagine you taking a trade with anger from beginning, and maybe let's say something happens, you lose it. The anger will multiply, and there's something called revenge trading. This is when you want to actually get your money back because you know you can. That doesn't mean you will. And you try, you see yourself losing so much because your strategy is not there. You are just doing based on probability, which leads to what? To gambling. You understand? You need to approach forex trading with a positive mindset. You need to go with a positive mindset. You need to know what, you need to understand your feelings, and you know if it's good for trading. And if you don't feel like you're in a good mood or your best of mood, do not trade. Trading has to do with emotions, and if your emotions are altered already before you enter, other things the market could do could, enrage you, and you see yourself losing money, and there's nobody you can blame for it apart from yourself. So that is the first one. Always trade with a positive mindset. Let's head over to number two. Okay, so now don't oversize your position. I cannot emphasize this enough, sir, ma. There is no trade that is certain. There is no trade that is certain. Even if the trade setup matches all your strategy plan and it has so many confluences, it is not certain. Maybe you are hold on to one lot size. You're using one lot size for almost some of your trades and whatever, and you're risking maybe 2%, 1% in all your trades, and you just saw a setup that looks perfect for you. You see bullish flag, you see your Fibonacci, you see your trend line, you see your moving average, everything corresponds, your break and retest, your order block, whatever. It just so correspond, and you're like, wow, this is where I'm going to make my $1 million from. And you just go all in. You see yourself using 10 lot size because you believe that it's a sniper entry and it's going to go down to your favor and you're going to become rich that day. And sir, it's very unlikely. The market does not respect all those. In fact, whenever you see your setup so perfect, fear that your setup. Seriously, like whenever you see everything look so good, fear it, because you're not the only one seeing what you're seeing. There's people called the market makers. You understand? They actually manipulate the market. So when everything looks so perfect, doubt it, because those people have seen what you have seen, and they don't want you to make money. You're a retail trader. They manipulate the market, and you see yourself losing a perfect setup, and be like, and if you oversize your position in that particular trade, you see yourself losing that trade. You understand? Losing more than 50% of your account, more than 20% of your account in a single trade, and it does not make sense. You understand? It doesn't balance your psychology in trading. So do not ever oversize your position. Okay? Let's move on to the next one. Okay, always stick to your trading plan. This is very underrated, and I won't waste time here, but I will try to hit some, serious news on the head. Whenever you open your chart in the morning, whenever you want to trade, no matter the session, London, New York, Asian, whatever, and you open your chart, you should have where it is written the currency pair that you are watching, what the setup you're looking for. And Sama, if it does not, what you're seeing on the chart does not correspond to what you've written down or what you've planned in your head, no matter how the setup looks like, even if it's not what you planned of. Maybe you're someone that trades Fibonacci. You wait for always a Fibonacci retracement, but that is not a Fibonacci retracement you're seeing. You're seeing it merging up to the moving average. You understand? And it's not your Fibonacci. Do not take it, because if you're trading out of plan, you're spoiling the numbers. Forex is a numbers game, and if you're not consistent with your own plan, you're now switching strategies that has different probabilities. What is the possibility that you're not taking the losses from both sides and you're leaving out the winners? You see, you can't really tell. That is why you have to stick to your own strategy, no matter how others look like. You don't trade other blocks. You don't use smart money trading plan. Why are you trading it today? Because someone said about it 2 days ago and you're like, wow, I like what this guy is saying, let me try it. And you just forgot about your own consistent plan and you switch over to the person's strategy. You see yourself, the numbers won't add up. So please and please stick to your trading plan. Let's head over to number 4. Always use a stop loss. I wish I could overemphasize this, but what else will I tell you than always use a stop loss? Sama, do not ever open a trade with the hope of it going your direction, and because of that, you leave it without applying risk management. In anything, any trade, no matter what you're trading, gold, Ethereum, Forex, whatever you're trading, always use a stop loss. You are not certain to be right. It's not obligated for you to be right. It's not a must. It's just related to don't oversize your position. Setting a stop loss is as important as that, if not even more important. Always know when you are wrong and set a stop loss at that point. You make a trade, you see a strategy, and you're like, okay, if this market can break this structure, it's going to go to this level according to technical analysis. You understand? But if for whatever reason it begins to retrace and it begins to take out some of these structure highs, then I know that my analysis was wrong and I want to be taken out of the market. That point where you know that if the market starts going to your analysis is wrong, put your stop loss at that point. You understand? With a calculated position size. You can see the secret of staying in this game is keeping your capital. If your capital is still there, you can take trade another day. So what is the need of you wanting to make all the money today by not keeping stop loss? You feel, okay, this market will go down. I know it must go down, but it's very possible that it might want to spark up and the market want to manipulate me first of all before it goes down. And so because of that, I'm not going to put any stop loss. Sir, what if the market is making a reversal and the market totally starts going up? You can't tell. How are you going to prevent it if there is no stop loss and you just see yourself blowing your account and you're just watching it? So please always use a stop loss. Number 5, avoid overtrading. This is an uncommon concept. People say, how do I overtrade? It's not when I say a setup, I take a trade. Please, Sama, there is something called overtrading. And this is when you are trading when you're not supposed to. You understand? You have to define what kind of trader are you. Are you a scalper? Are you a day trader? Are you a swing trader? Are you an investor? Many of you are day traders and swing traders. You get. So now, you now see yourself a day trader, you're taking up to 10, 11 trades a day. You're taking up to 6, 7 trades a day. Like, is that how common your strategy is? How come you're always seeing your setup? It doesn't really make sense. You understand? You see, Forex is like a waiting game. You need to be patient in Forex for your setup to show. And someone that always takes trades every single time, I'm not certain that you're always seeing your setup before you're taking those trades. You just want to make money. That's why every single time you're entering the market, you're going out, you're entering, you're going out. Even if you're observing perfect risk management, maybe you don't risk more than 1%. What is the probability? You take 7 trades in a day and you see yourself losing 1% in those 7 trades. You've lost 7%. That's only that day only you've lost 7%. So you see, it's just like you overtraded. Just as if maybe you oversized your position in one trade and you lost 7%. It's almost the same thing by overtrading and you're still losing because you're not seeing your right setups. So the advice here is that always have a daily drawdown. Set a daily drawdown. It's like if my account is up to 4, if I've brought my account down by 4%, I'm not trading that day again. Like that is my daily drawdown limit. You understand? Give yourself a daily drawdown limit. You can give yourself 4%, give yourself 5%, you can give yourself 3%, but let it not be too much because your psychological thinking in Forex is very, very important. And if you're using the mindset of you've lost too much to take another trade, you will want to oversize your position. You understand? You see yourself breaking certain rules and you want to get back all your money because you think you can. Actually, you can, but that doesn't mean you would. That is the point. So please avoid overtrading. And I really wish I could talk about more stuff, but the video will be extremely long. I don't have plans to make the video long. Just keep on following this channel, subscribe, and turn off your notifications. Comment the kind of video you want to be seen on this channel. It's going to help. Make sure you like this channel because it helps with the YouTube algorithm so that other people can see it. If you find it helpful and useful, and take care. Don't forget to subscribe. Take care.